You're live.
Hey, wealth builders, welcome to Bitcoin Hard Talk episode 23, where we discuss hard talk about hard money. And today we're going to be discussing the fact that Bitcoin has now sustained its price above 60,000 as it reached almost new all-time highs this week, and where we think it's going to go next. And obviously, we talk about all of the latest in Bitcoin, in macro, and geopolitical so that we can navigate this transition and prepare you for a world of Bitcoin and central bank digital currencies. If you're new to the show, my name is Simon Dixon. I spent the last 2 decades obsessing over the subject of Bitcoin, investing, and money so that I can prepare and help my viewers prepare for a Bitcoin and CBDC world and navigate the environment in front. So without further ado, we're going to get right into Bitcoin Hard Talk episode 23, which is where will Bitcoin go next and can it reach new all-time highs? So the first thing is that we're going to cover the latest this week in the Bitcoin markets and the macro and the geopolitical before we hit the topic of where Bitcoin may go next from my experience, having been involved in all of the cycles ever since Bitcoin launched, and my involvement in the first cycle, the second cycle, the third cycle, the fourth cycle, and this year we enter into the fifth cycle. So firstly, in terms of Bitcoin and crypto news, well, we had some responses from Sam Bankman-Fried, the fraudster that created FTX, that is currently in prison, awaiting the sentencing. So he had his lawyers recommend approximately 63 to 74 month sentence versus the 100 years that he was facing based upon all the different charges. So we shall see where that happens, but sentencing is going to be happening towards the end of this month. At the same time, we had the exit of a bunch of different bankruptcies. And so in 2022, when the whole crypto market blew up in terms of the centralized companies that were pretending to be crypto banks, we are starting to see all of the different exit results. BlockFi has sent a piddly little bit of US dollars to creditors relative to what they had. We'll see what happens next with that. On the flip side, Gemini is going to be paying 100% in kind. And it's fascinating to see the difference in these different bankruptcy cases with the crypto banks that blew up. Gemini was really the Winklevoss twins that were representing a bunch of creditors, and all of the money was invested with Genesis. And Genesis is a subsidiary of Digital Currency Group. And they managed to get 100% crypto in kind. Now, that's because the Winklevoss twins really pushed back against Barry Silbert. Barry Silbert, if it wasn't for the Winklevoss twins, had the option, like it was with all the other creditors, like the FTX creditors, of stealing all of the Bitcoin upside during the Chapter 11 bankruptcy proceedings. But they won, and they managed to successfully get 100% crypto in kind back. Why? Because they didn't leave the criminal lawyers. And if you're familiar with Breaking Bad, we always say you don't need a criminal lawyer, you need a criminal lawyer. Well, the criminal lawyers in the other Chapter 11 bankruptcies, they got completely different results. So because there was one very influential, significant creditor, the Winklevoss twins, they took it to Barry Silbert. They took it to the Twitterverse. They managed to apply a lot of pressure. The Bitcoin price rises, and rather than using the old Chapter 11 trick of dollarizing the claim at the bottom of the market, waiting for Bitcoin to go up and bail out the bankruptcy, but paying them off in dollars, they actually got crypto in kind. So there are no loss suffered. In fact, it was the opposite. It was a forced hodl position. So rather than being able to sell their Bitcoin, they got to ride the whole market from 20,000 to 60,000, and they'll be getting their Bitcoin back if this is approved in court. So this is what happens when you have entrepreneurs running these bankruptcies. This is exactly what happened when we were part of the 2016 Bitfinex hack recovery. where instead of leaving it to the lawyers and the bankruptcy proceedings, we restructured the company and used financial innovation in order to make sure that the lawyers didn't get paid and creditors did. And we created one of the most successful recoveries of all time. So with Gemini, they got 100% of Bitcoin back in kind. With Bitfinex, after the hack, they got shares in the company that's 16x in value. They got most of their Bitcoin. They got a token that they could sell and hold on for debt. And they also got entitlement to whether the hack funds were recovered. And the Department of Justice also recovered those funds. But guess what? The gangsters at the US government and Department of Justice are still holding on to those funds rather than paying them out to the victims and the creditors. So whenever you get the US court system involved, the leeches and lawyers find a way of leeching out all the money. And whereas when the Winklevoss twins were left to their own devices, they get 100% crypto in kind back. When we did the restructuring with Bitfinex in 2016 and Bank to the Future were involved, we get one of the highest performing investments there. In the case of BlockFi, they got cents on the dollar because the lawyers didn't have all the creditors lobbying. And in the Celsius case, we got a ruling in the last 2 days, which it was nice to see. But the judge actually recognized the work that myself and Bank to the Future did in allowing, we got credit for designing the plan, which was how to restructure the assets after Mijinski stole approximately 50 to 75% of the value from it, restructuring those assets and getting everyone the payment back. So the judge recognized it, despite the lawyers in the Celsius case, despite the lawyers at the UCC saying they came up with the plan and rewriting history, the judge ruled. So it was nice to see anyway that came out, and also credited myself and Bank to the Future with the over $2 billion that creditors gained as a result of persuading the judge and the bankruptcy not to sell the Bitcoin and crypto and to get out of Chapter 11 before Bitcoin hit $55,000, which leads to the scenario that happened to FTX creditors, where they use the dollarized value, they steal all the assets, give them to the IRS and the US and the gangsters at the Inland Revenue Service. And in the case of Celsius, we managed to avoid giving it to the Federal Trade Commission, the SEC, and all the other state regulators that wanted their share of victims' money. So we successfully avoided that. We avoided what we call the rug pull. But unfortunately, the lawyers made a decision to use Coinbase. Now, I loved Coinbase in the beginning. I was a seed investor or very early investor in Coinbase, and so were Bank to the Future in about the second or third round. But Coinbase is like a crypto bank now. They have over 100 million accounts. Now, how active those 100 million accounts are, I don't know. But literally, Celsius creditors are now, they've got their distribution through Coinbase, and Coinbase left, right, and center is just closing people's accounts. The problem with that is that you end up getting the dollarized value when they exited bankruptcy. That was when Bitcoin was about 42,000. It's now over 60,000, which is another decision that the lawyers make. So this is what happens when you get the US government and the gangsters from the different law firms that try and legally do what SBF did, and he's facing 100 years in prison for, which is spend client money. It's another part of the system that needs to be exposed, and that is the US bankruptcy process, stealing people's Bitcoin upside. And thank you to the Winklevoss twins that successfully managed to get all the upside, and congratulations to those Gemini creditors. But when you see the final numbers, I'll compare all these eventually in Bitcoin Hard Talk. You'll see what happens when you put lawyers and the US system and all of the leeches at the different government agencies that try and get their piece. This is what happens when a country has an over 130% debt to GDP ratio and a military industrial complex that is leeching money out of the world in order to prop up the debt-based monetary system that is the US dollar, that is creating ginormous wealth inequality, because all of those profits are coming back to those in the richest 1% of America at the expense of the inflation and tax that the poorest part have to pay. and they're already paying the highest interest rates on their credit card debt relative to the richest in society that are paying virtually 0% through quantitative easing loans and those bank FDIC bailouts. The system flips on its head, and you get this kind of civil unrest that we are experiencing right now as the fiat proof of weapons network actually starts to get more and more predatory practices because they're trying to pay the interest on the debt when the debt-based monetary system does not have the interest existing in the first place. So everyone has to get deeper into debt. You get wealth inequality until eventually the empire crumbles because the military industrial complex takes out all the profits and the government ends up with all the debt. And then the central bank comes along and tries to roll over the Ponzi scheme for as long as it can. Anyway, the court ruled in my favor in the Celsius one. So that was nice to see that we got a little bit of credit for that. But, it is what it is. And we avoid getting the FTX run pool as well. Now, in other news, we talked about last week in Bitcoin Hard Talk, episode 22, about Circle, another company that raised finance through Bank to the Future that I'm a shareholder in, that issued the second largest stablecoin USDC. They are now starting to exercise influence over which blockchain is used. So it's kind of a bittersweet. So most of the transactions happen on, for stablecoins happen on Ethereum. But a bunch of them happen on shitty little blockchains that are more centralized, that have cheaper fees because they are more centralized. And that is the Tron blockchain. Now, obviously, the government wants to come after Tron because Tron was created by somebody that I don't think has a good future with the US government because of all the different things that he's allegedly done, Justin Sun. But Circle demonstrated a new precedent, which is that they said they're no longer going to support the Tron blockchain for USDC. So what we start to see, forget the Tron blockchain is not something I care about, but it is a speculative attack on a blockchain as a result of stablecoins. So stablecoins, USDC, essentially, the government can apply pressure on Circle, the company. Then USDC can say, we're not supporting this blockchain. And then when they don't support that blockchain, that takes out a massive chunk of the volume and the utility of it. That can do a speculative attack on the price. And then you can exert influence over those blockchains and say, no, only do it on Ethereum and Bitcoin. And so this is the importance that Bitcoin brings to the market. So now I hope you start to learn that the decentralization and the reason why Bitcoin created its code as it has is completely different to all of these other different types of blockchains. And now stable coins are becoming the regulators of blockchains based upon the utility of the stable coin and pressure from regulators on those centralized financial institutions. So we'll keep watching this. At the same time, they tried to reach out for clarity. Different publications reached out to Tether because they're outside the US. They don't necessarily have to bow down, but all the different stablecoin regulations are coming through. And so USDT, they made no statement about whether they're going to continue or discontinue Tron, but it's clear that you can see from these activities that there might be bad things that are coming for the Tron blockchain as a result. And now we start to see how these power plays evolve and how different influence. Now contrast that to something like Bitcoin, where China comes along and says, we'll ban it. And what happens? It starts to reach all new time highs, mining reallocates. People in the geopolitical sphere start mining Bitcoin. So America starts making public companies. We have all these public miners that come from many of the China volume and hash power going over to America. And then geopolitically, Iran starts deciding we're going to mine some with our sovereign funds. South America says we're fed up of the economic hitmen at the IMF and the Bank of England that are concerned. We're going to start pushing that industry. And a bunch of that mining is now looking for geopolitical diversification. So we had a conference call, an earnings call from Marathon, which is the largest US publicly traded Bitcoin miner. And they said that they are starting to look at other countries to diversify. They were looking at Ethiopia. and various other countries. Now that brings in interesting, great opportunities for those countries that have previously been oppressed by the proof of weapons network, thanks to much of the colonialism that was funded by central banks and the proof of weapons network. And they get to now exit the system and get involved in. And I would love to see the renewable energy and the different innovation that's happening, whether it's solar or geothermal, whatever it may be, the different types of mining and innovation. I would love to see some of that happen in Ethiopia, a country that has been completely oppressed by the proof of weapons network. And so proof of work could come along in the geopolitical side, and start to save the day. But we're starting to see anyway how these different types of plays in the Bitcoin industry, repurposing energy through proof of work, and how it starts to play into some of the geopolitical situations. So remember, this is a precursor to central bank digital currencies. Stable coins were the reason that central bank digital currencies are going to be coming through. The central banks are just watching how they do things. And so remember, and I'll be going through how this all comes together as we go through why Bitcoin is reaching new all-time highs and where those pressures are coming from. And so remember, Bitcoin is the only one that is decentralized. And so if you remember last week when I covered the difference between spending money, saving money, investing money, and contribution money, go back to that episode if you didn't watch it, because that goes through, why it's important. If you're going to be investing in something that's less decentralized, then make sure you put a plan as how that comes back into your savings. Okay, anyway, so the normal cycle, we're starting to see a break of the cycle because this week Bitcoin hit a peak of $65,000. In 2022, the peak before all the fraudulent companies collapsed, which was triggered by the fake central banking that was happening with the so-called decentralized USD, the Terra Luna project. Before that started to be imploded by the increase in interest rates because they were pivoting to a hyperinflationary cycle. And the hyperinflationary cycle was from the COVID money printing, and also the supply shocks from the government intervention in shutdowns and confiscating Russia's central bank reserves. That created this massive shock that blew up the market. And then some of the stable coins, Terra Luna, just exposed the fraud, and then that blew up all the different markets that came from that as well. And so prior to that, Bitcoin hit about 69,000, and then it has this amazing free market mechanism where it says, hey, there's all these crazy fraudulent crypto banks popping up. Let's teach people the lesson of self-custody, and let's start to do that before the next halving cycle. And so prior to that, we had the all-time high of 69,000. This week, we reached about 65,000, and now it started to stabilize around 60,000. Now, if Bitcoin reaches all new all-time highs before the halving, that is a bit of a break from previous cycles. And I'll be going through the different cycles and my experience of the different cycles in the second half of the show. But if it reaches 69,000 before the halving, that means that the market for Bitcoin has fundamentally changed. And I'll be going through some of those, the different trifecta activities that may lead to that happening. Again, not financial advice, not legal advice, not tax advice. I very rarely talk about it in terms of the short-term pricing, but we are starting to see a change in the market as a result of that. Now, in terms of where is the proof of work happening, because that becomes important for the macro and geopolitical cycle. And so while we cannot be 100% certain, because the way that Bitcoin miners do is that it is very decentralized. You have node operators, which are verifying the transactions, miners that are conducting the work in order to get the seigniorage, the new Bitcoins that are mined every 10 minutes. We have the difficulty rate adjustment. And we have what's called mining pools, which is rather than you pull together with all the different people that are mining. And so that kind of distorts slightly where the mining hash rate is coming, which is important. But we do know, some where we can make estimates, and certain websites makes estimates of where politically the different mining is happening. And so even though there was meant to be a Bitcoin mining ban in China, still approximately 15% of the global share of Bitcoin mining hash rate is still happening in China. And so they are reversing that trend. So follow the money, don't follow what the government says. That's my rule is, just like everything, if you want to get ahead of it, you have to follow the markets and money, not what the politicians say. Because of the ban, though, they lost a lot of that hash power, and that went over to USA, which has approximately 40% of the proof of work network at the moment in terms of hash power. China has about 15%. Russia has about 12%. So if you combine across the BRICS layers, you got China with 15% of the hash rate, Russia with 12%. And then you've got other jurisdictions like Canada, which can very efficiently mine Bitcoins because of the climate and the cold weather in different locations that you can repurpose some of that cooling. That's what we did with in Iceland in 2014. And they got about 5% of the hash rate, according to these estimates. And then other jurisdictions like Kazakhstan, 3.5%. And obviously different jurisdictions that have joined the BRIC layer, the BRIC corridor, rather, like UAE, which is about 3%, and Malaysia, which has about 3% as well, and Norway, 1.5%. So some of the European jurisdictions, and I was really happy to see it there. But Ethiopia, the ninth largest, with about 0.3%. But I really hope that companies like Marathon, the largest public miner in the US, if they start to diversify some of that hash rate and they can prove that industry, then this is awesome. And I'd love to see a wave of proof of work beneficiaries happening in some of the different African nations that can build an industry there. Love to see that. But that's the data that we were seeing anyway. At the same time, there was an announcement from MicroStrategy. So MicroStrategy is the company that decided to use a public company, decided to use Bitcoin for their treasury reserves and become almost a proxy for buying Bitcoin before the ETFs happened. They have now purchased a further 3,000 Bitcoin worth about 155 million. That means that they now hold on the MicroStrategy public company balance sheet approximately 193 Bitcoin worth about $1.2 billion at today's rate. We've also, obviously, we're tracking El Salvador. We'd like to see more hodling there. But now Bukele just won his second election term, that he gets another 5 years to push the Bitcoin strategy. The world gets to see the impact of putting Bitcoin on the government balance sheet and the impact that has on tourism. And now that he's managed to get a lot of the gangster and go from a country with the most amount of murders and death rate to the country with without homicide some months as well, we get to see all of the tourism that's coming in as Bitcoin spreads its piece, and it's got its $26 billion of IMF economic hitmen and government corporate bond debt from all of its civil wars. It spreads peace by the Lightning Network adoption, people being able to save a percentage. Now they don't have to give it to gangsters, and they can save the 30% that they used to have to clip off and give to gangsters and put it in Bitcoin. I spent a bunch of time on the ground teaching people how to save in Bitcoin and how to manage their affairs in the only country in the world where Bitcoin is legal tender. But also the government's putting it on their balance sheet, and we get to see in real time Bitcoin on, using corporate treasury, individuals servicing their debts and exiting the proof of weapons network, and now countries showing that they can eat up some of that IMF economic debt. And so that is a really interesting one to watch. And MicroStrategy continues to show how you can take a business and you can use corporate treasury in order to make a very, very interesting trade. Some warnings. We're starting to see withdrawals suspended on a crappy little exchange called BitForex. They suspended withdrawals after there was a bit of a board shakeup. This is not good sign. ZachXBT, he published some research on Twitter around some dodgy transactions coming out of that exchange. That is not looking good. That exchange, if you are stuck in that right now, I am sorry, it's not looking good. This is a lesson. You don't store on exchanges. You either do self-custody through cold storage, or you go with regulated virtual asset service providers that are subject to audit requirements in order to demonstrate that they have the security, processes and protocols, and they also have to demonstrate that they have those funds as reserves in their audits as well. So that's most of the Bitcoin news that we experienced this week. In the macro stuff, not really, a little bit quiet at the moment because we're moving into many of the election cycles. And this is when you start to see much of the manipulation where you realize that central banks aren't that independent of their governments. But we did have Japan joining the UK in officially being in recession. So the UK announced that it is officially in a recession, and Japan also announced that it is officially in recession. Japan is the one country that has over 200% debt to GDP. It has an aging population in terms of its demographics, and so it really is demonstrating that many people, when they put out, we see a lot of demographic analysis on the macro side around China because it had a one-party policy. And it has record, and now it's got to service all those people. When it had a one-party policy, you have a retiring population, like we're experiencing in the UK, all the baby boomers retiring, and a less productive workforce. That drives it into recession. And when everyone's deep in debt, you have to factor in all the credit card debt, government debt servicing. That creates inflationary rich-poor divide, and you enter deeper and deeper into Ponzi economics. Japan is one of those countries, and it's one of the only stock markets that never really recovered from its all-time high based upon the proof of weapons Ponzi network driving money into those stock markets. But you can see Japan has record levels of debt, and when its stock market was reaching all-time highs, it then went into a quantitative easing cycle, and it was the one of the first central banks to do that. But we're starting to see the same thing at the moment in the US. Record levels of debt. We've got record levels of needing to be able to service the military industrial complex. That's extracting finance from those that are getting inflation and tax at the poor, at the lower level of income, into the hands of the military industrial complex, which is then efficiently being extracted from the economy. And at the same time, they are close to the central bank, so they can borrow against the central bank in order to fake the economy into thinking that stock markets are reaching new all-time highs, because they can use that money that they borrow in order to buy back stocks rather than buying Bitcoin like MicroStrategy. And so the S&P and the NASDAQ are reaching new all-time highs as well, mainly driven by some of the AI stocks. So NVIDIA is really one of those stocks that created a bit of a crypto play as well, where a lot of the pump and dump tokens that are involved in AI. So the way you know about the alternatives to Bitcoin is you've got proof of work, and then you've got the proof of stake network, which is a lot more risky, which is Ethereum. It transitioned from proof of work to proof of stake. However, it has stood the test of time in being number 2 on coin market cap. Every single year, if you take the top 10 or 20 cryptos, every year they're different. So you are drawing into being a trader if you want to play in the more speculative game there. And so a lot of these pump and dump tokens, they come along, they use the AI narrative. AI becomes something transformative, and then that's driving people that are putting more speculative power into those. I'll go through a little bit of those cycles and trends as we cover why Bitcoin is reaching new all-times and why it might meet new all-time highs as we go through pre-halving. We'll see. Another piece of news as well was the whole proof of weapons network was really ramping up in terms of the confiscation of Russia's central bank dollar reserves, in terms of using it geopolitically in order to pay for the Ukraine war. And so NATO wants to inject more funding into Ukraine. That's resulting in more and more people being killed, both on the Ukrainian side and the Russian side. So people are just dying because of this war that just can't be won, because NATO wants to weaken Russia. And Russia is obviously a more powerful in terms of nuclear, and really escalating the risk of the proof of weapons network ending in some kind of nuclear intervention. And so we're seeing a lot of that. And the end of the dollar is obviously when nobody can use it as their bank reserves. And so if countries can no longer use it because they think if you make an enemy of the US, they're going to confiscate, delete your dollars and give it to the person that you're raging a war and invasion against, in order to fund an expansion against NATO. And then you have the geopolitics, the different types of sides, where these atrocious governments from the US and Russia are censoring information. Then you get yourself in the middle of a geopolitical warfare, and your funds that are being confiscated from you could end up going to the very same place. That is not a useful reserve. And so therefore, when governments and central banks are deciding, where do I hold my reserves? Imagine what a shitcoin it is if you hold them in US dollars and you know it can be confiscated, just like when Venezuela held its gold at the Bank of England, and the Bank of England said, we don't like what you're doing. And obviously there was a very oppressive regime, lots of civil unrest, and therefore they confiscate that gold. So, this is kind of some of the demonstrations around the challenges of storing gold in another central bank and storing dollars using those world reserves. So when you're thinking about what are you going to be using as your geopolitically neutral world reserves in the future, how about the one where it's very easy to store? Bitcoin. It's very easy to audit. Bitcoin. It has many of the same properties as gold, but more scarce. Bitcoin. And it's easier to transport around the world when you enter into military engagements and you decide that you need to settle with those countries when no one trusts each other's currencies. Bitcoin. And so we are starting to see at the individual level, the company level, and the sovereign level, the philosophy that I covered in Bank to the Future, Protect Your Future Before Governments Go Bust, rolling out in real time. And so I don't like to talk about, deaths, but the creator of, or one of the perpetuators of the Proof of Weapons Network, one of the family members, Jacob Rothschild, passed away. And many people have mixed feelings about that. He was age 87. I just want to put it out there, but this is one of the largest perpetuators of the Proof of Weapons Network, funding both sides of wars as a family and creating the bond market, cornering the bond market, and persuading central banks in order to hand over hard money for soft money and gradually remove its backing by gold and silver, while the wealthy people hold in gold and silver, and they give everyone else fiat currency, proof of weapons, Ponzi schemes that use debt in order to create all this wealth inequality. So while it is always sad, we definitely don't celebrate the passing of people, but at the same time, it has led to a lot of death and destruction of others as a result of the actions of that family as well. Right. On the other side of the Proof of Weapons Network, we also got demonstrations on the geopolitical side, and this will be the last one before we go through some of the other topics on what's driving the Bitcoin price at the moment. But tax being used as a weapon in order to ransom a country, which is currently being used in the Israel-Gaza war as well. So if you did not watch it this week, a horrific massacre was inflicted upon Israel that is committing genocide and starvation by holding back humanitarian reserves. And after a month of not getting reserves, causing mass famine, some of those humanitarian aid got this, and they used that as an opportunity to massacre. And therefore, US standing by Israel is now standing by some of the atrocities that they can no longer stand behind. And everyone is starting to see the real implications of what they stood by. And so that's really happening. And at the same time, they were getting pressure from the US in order to stop using tax as a weapon of mass destruction. And so Norway stepped in and they had to be an independent arbitrator to get that tax back to Gaza during this humanitarian crisis, so that Israel, that was essentially using tax collection as a weapon of mass destruction, they took their 3% cut. And over the years, They pretend that they're not occupying a country to fool the West into funding the military industrial complexes and the 14.5 billion that is trying to be funded right now from American taxpayers, causing inflation into Israel. They're just conducting massacres and everyone's just watching aside. Humanitarian crisis, everyone will start to see that. And that is the geopolitical side that we have started to experience right now. So you can see how this all fits together. So now let's look at what's actually happening in Bitcoin. Now, why for the first time did we look at potentially hitting new all-time highs before the end of this halving cycle? So I said we covered it's sustaining itself over 60K. I don't care about the short-term price, but we are starting to see really the cycles prevail and this new cycle. And I'd like to just share with you a little bit of the background in terms of all the cycles that I was involved with. So obviously, before I got involved in Bitcoin, I was part of the monetary reform community and I was writing books and lobbying governments. And I left my career in investment banking in order to show the world how fiat currencies are debt-based Ponzi scheme bombs funded by proof of weapons. I didn't call it proof of weapons at the time because we didn't have the invention of proof of work, but that led to Satoshi Nakamoto looking to disrupt banking after the financial crisis and give people Bitcoin in 2008. And so I got involved in 2011. So there was 3 years where I was, I started to cover it in the book in 2010, then published that in 2011. But the first cycle after I spoke at the first Bitcoin conference was really about proving that a decentralized network could be created. Because Satoshi was mining all the Bitcoin. He sent them over to Hal Finney. And there are people now in court in the UK that are claiming to be Satoshi Nakamoto, and they are getting exposed for all their confessions around the fraudulent documents that they put together in order to try and explain that they are Satoshi Nakamoto to fear people into buying their shitcoin, Bitcoin Satoshi's vision, which is based upon creating fear that that person that is mining all the Bitcoin with another billionaire called Calvin Ayre and Craig Wright, in order to trick people into thinking that they have created Bitcoin. So that is being exposed in real time as the court case prevails. But cycle one was about really what's interesting is those million Bitcoins that were mined have never been moved. And so we started to get an email dump in the court case around all of those early emails with Satoshi Nakamoto and some of the early Bitcoin developers that were involved in that. And we're starting to learn more and more and more about that. But cycle one was really about just proving that this could be decentralized. So Satoshi was mining on his computer, wanted to get over to GPUs where other people came in and mining with graphics cards. And then the ASIC industry that funds the proof of work network at the moment by creating the freest market of Austrian economics. That's being rolled out in real time. And in cycle one, it was just proving that it could be decentralized, because the next 4 years in cycle two was about surviving legal enforcement. The US tried to shut it down. Japan tried to shut it down. Other exchanges tried to shut it down as people lost their money in exchange hacks, and it survived legal crackdowns. Where at the time, that was the time to take it down. But fortunately, it got decentralized enough in cycle one that the government just didn't have a door to knock on, didn't have a person to blame, and couldn't attack all the different miners. And so therefore, it survived the legal crackdown of cycle two. That brought us into the next 4-year cycle in cycle three, which was about demonstrating that there only is ever going to be 21 million Bitcoins. In cycle three, this is where everybody tried to plagiarize Bitcoin. People came along and said, hey, there's no longer 21 million Bitcoin. We're going to fork the chain and there's going to be 42 million Bitcoins because Bitcoin Cash is the real Bitcoin. And everyone fell for that. And Bitcoin remained the real Bitcoin. And it just demonstrated that no matter what you do, you can't do that. And then Bitcoin Cash got forked into Bitcoin Satoshi Vision because the guy that's being caught, Craig Wright, that's in court right now, he said, I created it. I created the white paper and I'm going to sue all the developers for copying my innovation. And then it just goes further and further down the cycle of centralization. It then gets 51% attacked and demonstrates that there is only 21 million Bitcoin. There is only one Bitcoin. And everyone that comes along and tries to create their own version, it is not simply the technology. It's not like an internet startup where you can then have MySpace that gets disrupted by Facebook. It is more a commodity, which is why it's legal tender in El Salvador, which is why we got the Bitcoin ETFs, because regulators realize that it's more like a commodity that doesn't change. And it's why everything else is struggling in terms of just being pump and dumps. And Ethereum kind of got that status of sufficiently decentralized. And then the ETF picture will tell us whether that actually happened. So in cycle 3, we had all of the token printers and some of those companies that were in the original token printing, they ended up blowing up their companies in the fraud cycle that happened in cycle 4. And so cycle 4, the 4-year cycle, was about surviving regulatory crackdown. We had regulatory crackdowns in every cycle, but this one was the most ruthless and brutal because of all the fraud that happens from those that were printing tokens and ended up creating pump and dump, and companies that were creating the fake banks that we talk about when we're covering the consequences of those facing prison sentence around that. And so it needed to survive the regulatory crackdown, but also it needed to do something that it has never done before: survive inflation. Remember, Bitcoin was created in 2008 after the quantitative easing cycle. Now, when we had the geopolitical situation that we talked about, where we had COVID pandemic money printing, where central banks decided to destroy all their currencies, the dollar used its influence in order to exert and extract all of the dollar reserves through his, if you've watched Milkshake Theory, basically sucking up all the global reserves of dollars and then destroying its status as world reserve currency by deleting Russia. That led to a hyperinflationary cycle, or deleting Russia's dollar reserves, as it were. That led to that hyperinflationary cycle that then led to the increase in interest rates, the blowing up of the banking system, the Ponzi scheme rolling over that debt, and moving into quantitative tightening, where everybody had this crackdown. And so therefore, Bitcoin needed to survive inflation. It had the big COVID crash and all the different things that it had, but it survived it all and now reaches the status where we enter into the halving cycle, which is happening in April, and it survived quantitative tightening. So what comes next? Well, as we go to halving in April, we enter into the 5th 4-year cycle. And the 5th 4-year cycle really depends on the geopolitical and macro environment. We need to understand what's going to happen to all that bad bank debt on the bank balance sheet in the US, and the stable coins demonstrating to central banks that you could wipe out the banks in the middle and do what I covered in my original book, Bank to the Future, Protect Your Future Before Governments Go Bust. Just before we go through those trends, by the way, if you haven't claimed your free digital copy of it, you can go over to simondixon.com. You can create a free membership where I prepare people for a membership site where I upload all the backups of all these Bitcoin hard talks. I also have the video series that I want everyone to have watched that I created in 2020 called The Great Depression of the 2020s. And I also have a free digital copy of the book. And I'll also be emailing everybody updates as we go live to make sure that you are prepared for this. Later this year, we'll be doing our Bitcoin Wealth Builder program, the annual program, where I try and help people understand how to manage some of the trends that I covered. And so make sure you've got your free login at simondixon.com in order to stay up to date that. And then you can join the community as well. Also, after this, we've been doing our 3rd. We're now in our 4th webinar where we go live to all members of the Bitcoin Hard Talk membership portal. And you'll receive an email if you go to simondixon.com right now, create your free login and membership, hit that yellow button. Then you'll get an invite as soon as we go live after this. And it's a more smaller, intimate environment where you can ask your questions as well. So what is the 5th cycle? Well, the 5th cycle is surviving war if we enter into an escalating war, which everything is pointing towards. And then after war, if you remember the Great Depression of the 2020 video series, I said it will escalate into a monetary renegotiation. And that's why all the countries are piloting the central bank digital currency and observing the trends. And stablecoins have demonstrated that you don't need a bank in the middle. You can go direct from government debt to the blockchain technology and create these fiat currency that is a deleveraging cycle, because it doesn't have to be created as debt from a bank. It can actually be created as debt from a government, which means that that puts the seigniorage and interest earned back into the government's balance sheet, which can potentially reduce the tax cycle as well, reverse the cycle in terms of a geopolitical shift. That is obviously a major, major change, and that normally happens at the end of a wartime cycle, which is normally the change of an empire. Now, whether that happens in cycle 5 or not, everything's pointing in that direction. But these are the types of things we need to see. What does Bitcoin do during a large-scale war, and what does it do during the CBDC launch? I have my theories, and I will share some of them, and in future episodes. But then we move into cycle 6, which is where artificial intelligence, I believe, becomes so quantum powered and so wise that it says, hey, you governments, you did your monetary renegotiation after blowing each other up on the proof of weapons network. We think we can create our own central bank digital currency. And so cycle 6 will be what happens when artificial intelligence decides to create its own central bank digital currency, circumvents borders, and proves that it can do things based upon the algorithms and all the information that we're inputting into the data right now. And I think you'll see that Bitcoin will be a force against the oppression of central bank digital currencies, as I've covered in previous broadcasts. And so what are we experiencing right now? Well, we had the Bitcoin ETF. The Bitcoin ETF was, remember the trifecta that I talked about? I talked about how we're getting inflows into Bitcoin from the debt markets through stablecoins that are taking their excess profits and buying Bitcoin. And then we got the stock markets that are gradually transitioning over the next year or two to their compliance team, agreeing to service some of the demand from everyone that wants to protect their traditional funds and IRA, registered investment advisors, and then their own self-invested pensions, and then the more managed pensions and mutual funds. They're all adjusting to being able to allocate some into Bitcoin. Their customers are demanding it, and they will have to adjust. So the stock market is driving buying pressure through the Bitcoin ETFs. And then obviously all the geopolitical trends, people are getting into self-custody, which was the previous 13 to 14-year cycles where people were learning, don't leave it at an exchange, it gets hacked. And the infrastructure is being built in a regulated environment where custody services are becoming more regulated and audited. And so that is the trend that we are experiencing. And that seems to be pushing us potentially. Again, I don't do short-term price. Remember the underline of it. I like the price of Bitcoin to go down because I prefer accumulating cheaper as I exit proof of work cycles into, exit proof of weapon cycles into proof of work cycles. And so the cheaper the price of Bitcoin, the better it is given the long-term cycle, but you can't fight the cycle. The cycle prevails as it has every 4 years. Not financial advice, can't guarantee that it will into the future, but I don't fight the trends as well. And so essentially all of this new ETF wealth is coming into Bitcoin through the stock market. And then those that already had the self-custody, they've already got their Bitcoin allocations and they're deciding, hey, I've been involved in Bitcoin for a while. I've got some Bitcoin because they're maybe ultra high net worth in the Bitcoin world. They say, I'll put a percentage of that and you get a lot more VC investment into some of the more pump and dump. So you get the tokens outperforming Bitcoin. And then you get some of that money from those that have Bitcoin that are managing their wealth, pumping into that. They obviously exit. It goes through the same cycles. And so also that drives some more the Ethereum economics. So the Ethereum economics is everyone's launching their tokens on top of Ethereum. The more gas fees, because it's not like the proof of work network, that leads to more and more ETH being burnt, which is driving the economics of the Ethereum blockchain. And so it's all being driven by a Bitcoin-led market. And then obviously Ethereum, as I've been forecasting, now it's switched from proof of work to proof of stake. ends up probably getting owned by all the different banks through all the ETFs. And then it has to have this two-tiered decentralized and centralized narrative. But those are the different types of trends that we start to see there. Some of the wealthy, as the VCs, they start to pump the alternative markets, and you enter into those cycles. And then every year, the top 10 or 20 different cryptos either wrecks people and they end up with no Bitcoin, or they end up selling that, and the VCs tend to be on the right side of that cycle. Regulations comes through, and the trifecta that I talked about of self-custody, stock markets, and debt-backed stablecoins, and to drive this trifecta that we're experiencing right now. More and more companies recognize that, so they do it for corporate treasury. More and more countries, they see what MicroStrategy did, and more countries see what El Salvador did, and so you get more and more electricity allocated to sovereign mining as well. Then it becomes geopolitically important during a wartime and monetary renegotiation as we transition to a world of Bitcoin and central bank digital currencies. As more sovereign debt pays off the proof of weapons debt, then more and more countries try to do that. And that's how we end up in a scenario of Bitcoin adoption by individuals, by corporates, and by sovereign nations. And then eventually, as you take more and more pressure away, and I'll probably cover more of this next week, you start to see that the proof of weapons network gets more decapitated. And as it gets more decapitated, I believe the world moves more to a defense-based military spending rather than an aggressive-based military spending funded by the proof of weapons network. And so that's why you're starting to see some of the stock markets reach more all-time highs based upon the AI trend and narrative, as well as the military industrial complex stocks. And so remember, the military industrial complex stocks, and I'll go through more of this in future episodes, they start to pump as you get more of a quantitative easing cycle where they borrow against it. But if Bitcoin starts to eat into more and more of that market cap, what tends to happen is that countries, rather than being more aggressive and being able to print central bank reserves, they have to think about whether they're going to spend their Bitcoin. And when their Bitcoin in hard money brings savings back into the economy, when you have savings back into the economy, people get more frugal and they decide to actually save money that is more scarce rather than spend money where you have to increase your debt forever. And so eventually you could start to see these trends playing out where people have their nukes, or countries have their nukes, and people have their Bitcoin as a defense. And as it starts to eat more and more of the proof of weapons network, we end up more in a defense-based economy rather than aggressive colonialism, as we start to see more of these colonial proof of weapons funded atrocities that we're experiencing right now from governments all around the world, as that plays itself out in many of the geopolitical stuff that we'll be following, that changes through, I believe, artificial intelligence. So those are the different types of trends that we're experiencing. As always, we're now going to go over to an AMA session. And so if you are a member of the Bitcoin Hard Talk membership portal,
Sorry,
you'll be
Simon.
receiving... Yeah.
Sorry, I'm going to interject. We need to probably invest in some mics so I can secretly say something to you as we're live. So this is live. Just wanted to go back 17 minutes ago. So there was an issue. I couldn't really play back what you had said, but I've managed to successfully play that back 17 minutes ago. And you said, and I quote, so I need you to correct this because this is live. Everyone's listened to that part, and maybe many people were quizzing that or they could misinterpret it. So I'm just going to read it out. You said 17 minutes ago, you said, and I quote, a horrific massacre was inflicted upon Israel that is committing genocide and starvation by holding back humanitarian reserves. Do you want to correct that part? Because I did
I'm
play it
so
back five
yeah.
times. I know you said that.
Yeah, no, I'm really glad. And I want to make sure that we probably say that correctly. So, I really appreciate that you covered, and so make sure you do interject, Azad, when things like that happen. My brain tends to race at a faster pace as I go through these Bitcoin hard talks, but absolutely, the massacre is happening in Gaza, inflicted by Israel right now. And yeah, I certainly don't want anyone to misconstrue that. And if you haven't figured out right now what is happening, then I really don't know what to say. We have been through the journey over the last 4 months since I started uploading my journey of self-discovery around what's happening there. And I've been covering it in terms of the geopolitical trends. But if you haven't figured out that the media scammed you into believing that this was any of the trends that we were covering back then I don't really know what to say because now it is 100% evidence that the government are not in line with the people, and the people are watching these atrocities happen in real time. And we know some of the trends. And so, always thank you very much for doing that, Azad. And if anyone wants to ask any questions around any of the things that are covered on the Bitcoin side, the macro side, the geopolitical side, then head over to simondixon.com right now. And on simondixon.com, hit that yellow button. And on that yellow button, if you don't have a login already, create a login for yourself, create a username and password, and you will get an email shortly afterwards with an invite to a live AMA session. And in that AMA session, yeah, we've been doing this about our fourth one right now, and I'll be able to answer any questions to help you navigate through this. So always remember, you are alive at one of the most interesting and exciting times in financial history. Many are getting wrecked, others are doing incredibly well, and there are complete atrocities. And I want more people to do well so that we can try and support some of these people that are getting wrecked by the proof of weapons network right now. We do it with peace, we do it with love, we do it with unity in the proof of work network. And I'll see you on the other side where we'll do the live AMA on simondixon.com through the Bitcoin Hard Talk membership portal. Peace. I'll see you next week.